Hey guys, Rob Luna here at ADU America. I've got a live interview that's coming up next. You want to listen to this. There's some really good information coming up about the election just days away, what we're starting to see in the economy, whether or not this stimulus plan is going to get passed. And this is going to affect everything from your residential real estate, commercial real estate, your stock portfolio, all that coming up next. Listen in live.
All right guys, our next guest, you may have seen him on Fox Business, but today he's here to discuss some of the questions a lot of homeowners are wondering about. How is the election going to play into what our home values are in the real estate market? This is Rob Luna of SureVest Private Wealth.
Rob, thank you so much for joining us.
Yeah, thanks for having me.
It's crazy seeing you come in from the Fox Business screen.
Yeah, it's great spot to be here. Downtown LA, my home. I love it. No better place to be.
So we're talking about accessory dwelling units and we're talking about real estate all day. What's your perspective on how this tumultuous election is going to affect things for people?
Yeah, well, I mean, it's a big election, right? And everyone's going to be tuned into it. And I think there's some good and bad on both sides. And I think, one thing, I deal with multi-asset classes. So we deal with stocks, bonds, real estate. The one thing about the stock market that I love, it's a real-life, real-time indication of what's going on with the economy. It's a leading indicator. So what happens is when you see the stock market, that's usually going to lead things like real estate. It's going to lead things like commodity prices. So what you're seeing right now is the stock market actually is holding up really well. More than likely you're hearing that Biden's probably going to wind up taking this one. And contrary to popular belief, a lot of people think a Democrat coming in is going to be really bad for anything. Bad for business, bad for real estate, bad for the stock market. But I don't think that's the case. And the resiliency of the stock market, I think, is showing you that right now.
It's so interesting. And so now, if people see a downturn or a blip, like one day drop, does that mean stop real estate, or what's the next step?
Yeah, no, I mean, well, the stock market is, like I said, a real-time indicator. So think about it like this. If your housing was priced on a day-to-day basis, if you knew that your single-family house was up 5-10% in a day, you'd be going crazy. That's the problem with liquidity and the good thing about liquidity, right? Liquidity is great because you can turn it into cash, pay your bills, where a real estate property is not liquid. The problem is volatility comes in. So one day we saw the stock market drop today. That's not an indicator. It's really when you get a big pattern, you get months and months of downward provisions. But if you look at new home sales, if you look at retail numbers, we're hitting all-time highs. So when you look at the pulse of the economy right now, everything actually looks pretty good.
Mm-hmm. Is there a situation where people should build an ADU or think about one, and a situation where people shouldn't?
Yeah, well, let's look about this. Bring it kind of back to what's going on right now at the election, right? So we're talking about Biden getting in. So one thing we're talking about when we look at taxes, corporate taxes is really the big thing, right? When you looked at the previous administration under Obama, we had a 35% corporate tax rate, which was one of the highest in the world. Trump brought that down to 21. We're talking about probably bringing that up to 28, so not back to the rate we were at before. Now, he also did lower the top bracket of personal income taxes, and that does put more money back into the consumer's pocket. But with that, there were some exceptions. When you talk about SALT, the state and local tax exemption, what they did was they put a cap, right? So they said only $10,000 now in a combination of state income taxes and also $10,000 in a combination of property taxes gets maxed out. So that means, let's put it this way, if you're a couple in California making $175,000 a year, which sounds like a lot, but it's not, not a tremendous amount in the U.S. In California, especially, that caps you out at $10,000. So any property taxes is now not deductible. So when they did that, it actually hurt quite a few people. If the Dems get in, especially if we have a sweep in both the House and Senate, more than likely you're going to see that SALT come back. If that does, that's about an extra $7,000 back in the average real estate investor's pocket. That actually could be a positive for real estate investors.
It sounds really complicated when you get down to the state level and all that. How do people decide if they should make these decisions on their own or talk to a professional wealth manager like you?
Well, I think it's a combination of things, right? Again, we deal with very smart people. My average client invests $5 million and above with us. So these aren't dummies, right? They're very smart people, but they have their own expertise. Sometimes that's real estate, sometimes that's retail. It really depends, and I always say it really can't be all or none. It's about educating yourself in a couple things. Number one, if you're a great real estate investor, be a great real estate investor. Don't hand that part of the portfolio over to me, right? When it comes to stocks and bonds, you probably want to pass that along. But from that standpoint, it's just like building a business. You don't build a business by yourself. You build a team around it. So really, it's not a question of, am I a do-it-yourself investor? Do I outsource that? It's becoming an educated consumer of financial services, so you know when you build that plan, who you need to bring in. So for example, I was talking to a lot of smart guys here about ADUs. I was just introduced to ADUs maybe about 5 to 6 months ago. I think it only started in 2017. So when I'm looking at some of the properties that our investors are in, single family residence, when I start hearing, well, wait, we could build 2 other properties on there. We could finance those for $600 to $700, cash flow at $2,000, almost 2 times cash flow. That's pretty much a no-brainer to me. And I think what's going on with the economy right now, we've been talking about the TINA trade, meaning there is no other alternative, right? And so when you look at this, if you're an investor, if you're a stock investor, if you're a real estate investor, what you're always looking at to compare any investment you make is the risk-free rate. The risk-free rate is the 10-year government bond. So if you're a long-term investor, you always want to see what that 10-year government bond is paying. Because if you give the government your money for the next 10 years, they're going to pay you some rate of return risk-free. You know you're going to get that money back. The challenge is it's not going to increase, it's going to stay the same, and if you get inflation, you could actually be losing purchasing power. I started in the market a long time ago in the 1990s, 1998, that 10-year rate was almost 7%. So when I looked at it back in the late 90s, to get 7% without any risk, that was pretty attractive, right? So why go into stocks that are yielding 1.5%? Why take a risk on real estate to give 5%? Let's give my money to the government, no risk, and collect 7%. Well, let's take a look at today. When I look out at the next 10 years, the government's going to give me less than 1%, 0.75%. There's no opportunity for a raise. The Federal Reserve is really trying to push inflation to be above 2%. That means my real rate of return is 1.25% less. So why are people going to stocks? Why are people going to real estate? Cash is paying you nothing. The government's paying you nothing. You need to look for a better return on your investment. What I'm saying today, though, there's not a lot of easy investments out there. The real estate market is not cheap on any metrics. The stock market is not cheap. So you need to look at ways, whether you're hiring a professional, whether you're doing it for yourself, how do you add value to that picture? So when you talk about single family residence, now all of a sudden I could put 2 additional units on there that are cash flowing greater than 100% of what my loan charge is. That's a way to add value. So looking again at experts, like I said, I've been doing this for a long time. I'm still finding new ways to add value. So ADUs, I think, are a great way to add value in today's market.
That's so interesting. And I think you talk about investors at $5 million minimums, which to a lot of people is like, what?
Right.
And now I see you on Instagram and you're undervalued, but you're blowing up because there's good advice on there. Do people who have not $5 million have something to learn from you by following you on these channels?
Yeah, well, I think the biggest thing, right, is becoming an educated consumer. So, I built my practice a long time ago dealing with professional athletes, high net worth investors, because when you're charging 1%, you got to charge that on $1 million above. If I'm charging on $100, I'm not going to make very much money. So from a business perspective, that's where I built my business. I built the business in 2002. I just sold the vast majority to a publicly traded company in January of this year. So I'm really looking at an opportunity to expand the people I'm talking to. A friend of mine, Albert Preciado, introduced me to social media about 90 days ago. I had zero followers. I'm up to about 2,000 followers right now, but they're highly engaged, smart people. I've been in the media for almost 10 years, Fox Business, CNBC, Bloomberg. What I love about social media is that immediate interaction, for me, immediate gratification of people who are interested, want to know, and quite honestly, I get a lot of value of helping somebody when they're looking to buy their first home, make their first investment into the stock market, to really giving them advice. So what I'm trying to do right now is build up a community that we're able to deliver some of the information that I delivered to people at 5 million, 10 million. My largest client has 100 million invested with me. For people who are just starting out. Because the problem is, quite honestly, while I love social media, there's a lot of gurus and experts out there without the background, without the criteria. You need to ask what they've done, and that's what I'm hoping to bring, is some real world experience, knowledge to the table for people to learn from.
That's really exciting. Now, all right, this is a little curveball. Get away from the ADUs a little bit. I've read all these articles that are saying, like, it's kind of like people are bored and there's $0 trade partners, and there's all these stock investors now who are kind of like starting to dabble. People think it's a good way to invest. I think you've used the word snowflake. Do you want to talk a little bit about the difference between a real estate investment, real property, and some of the speculation people are doing?
Yeah, well, I mean, the appealing thing about real estate, right, is you make an investment in there, it's going to go up and down, but you could always drive up, touch it, you know what's going on, it's not going anywhere. When you're investing in a company, that's a little different. And not all companies are created equal. You know, you've got really very profitable companies out there that are more mature, like a Microsoft, or you've got some of these IPOs that are coming to market like Snowflake. So the challenge is, again, I grew up in the 90s where we had the first really big internet bubble crash in 2000. On some aspects, I think that's starting to happen again. And what you're really seeing with these new Robinhood investors, people that are entering the market for the first time, it really is a gamble. And the stock market is a place where you could store wealth, you can create wealth, but you could also gamble. And we're seeing a lot of that going on right now because, again, a lot of misinformation. You're seeing that in areas like cryptocurrency. Everyone's a genius. In 2007, 2008, your waiter was becoming a real estate agent. So what we say is bull markets like we're experiencing right now create a lot of geniuses, but bear markets flush all that out. And it's just a matter of time. Bear markets happen every 4 to 5 years. We'll see it in real estate, we'll see it in the stock market. Those people who are in right now riding that wave up, hopefully they get off in the right time. Otherwise, it usually doesn't end too well.
All right, so if you are a waiter, if you're out there and you're like, I got an option between save until I can get on the property ladder or try to speculate while things are going hot and there's all this volatility, do you have a one size fits all?
There's really not a one size fits all. It really comes down to your own personal financial plan. And that's why I said if you don't have a financial advisor, you need to educate yourself on building yourself a plan. It really starts with something like as simple as an emergency fund, right? If you get laid off, we saw a lot of that happen recently with what's going on here. You need to have some reserves because thankfully the government came out and put a backstop, helped fund some people. But what if that doesn't happen next time? We're waiting for that second stimulus. We see what's going on in Congress, a lot of bickering, a deal isn't getting done. If you don't have that reserve put away, and even though you're not earning a lot of money in the bank right now, you still need to have it for a rainy day. I would start there, then you start dabbling into things like the stock market, real estate. There's ways you can get started, whether it's the stock market or investing in real estate through things like real estate investment trusts for as little as $500 or $600. I think you shouldn't wait. It's time to get started as soon as you can, but getting that emergency fund started out, making sure you have a good solid job, those are probably the first two steps.
Sure. All right, so real estate investment funds, what's the first step? How does a person start learning about that, find out about them? Do they follow you? Do they go research?
Yeah, well, I mean, you could obviously self-promotion. You could follow me. I do a free talk on YouTube every Friday called Wealth Talk. The last one was actually it's a little bit long, about 20 minutes, but it talks about should you be a do-it-yourself investor or should you hire somebody? And really, I'll kind of rush to the punchline. It should really be both, but it's about having a plan, formulating a plan. I think you should do that. We have free information every Friday there. For people like entrepreneurs like myself, a lot of my clients are entrepreneurs. We're gonna be starting a new show in the next couple weeks. Again, just like giving you that framework or how to develop your own financial plan, the framework of how to build a sound business, because one thing I could talk about in this economy, there's two things that you need to learn. Number one is personal finance, because the days of graduating and going to work for General Motors and collecting a pension and them taking care of you, that's gone, so you gotta manage your own money. And secondarily, a lot of these people that got furloughed, those jobs are not coming back. So the year of the entrepreneur, the decade, the next 2 or 3 decades of the entrepreneur, and whether that's a full-blown entrepreneur starting a new idea, adding value to the society from the bottom up, or if you're a real estate agent, mortgage broker, you're still an entrepreneur. You got to figure ways to generate business, do your own marketing, all those things. We're going to have a show for those people coming up also.
You're speaking to my heart, Rob. It's been wonderful having you on. Is there anything you want to leave people with? Is like, hey, if you enjoyed this, there's one thing you should go Google. Figure it out.
Well, I think knowledge is power, right? Education is the greatest equalizer. You don't need to go the traditional route that I did. I've got 4 degrees from 4 different schools. That's kind of old school. The new way is really learning, immersing yourself, get a mentor, get online, Khan Academy, follow me, YouTube. There's plenty of information out there, but the power is up to you. You need to educate yourself. At the end of the day, nobody cares more about your money than you do.
I love it. There's so much we could be doing for ourselves and the community at the same time with accessory dwelling units and all these alternative investments. Thank you so much for coming on.
Thanks for having me. Hey guys, thanks for watching the video. I hope you liked it and you got some information that you can take away. If you like this video, there's a lot more information coming up for you. Subscribe below to my YouTube channel. Click the bell. You're reminded every week when we put on new content. Thanks for watching.